Sunday the 18th of March 2018. Elisa Gold's a developing gold story on the ASX, a transformational project in Turkey. I've talked about it a few times in these videos, but I thought it'd be a good time to just recap. They've had some decent announcements over the last couple of months that I think the market has really sort of just doesn't really care about too much. And I just wanted to talk about it a little bit. So their recent presentation they put this one up at the end of February. Start from the start. They're still aiming to have the project online, the sulfide project online by the third quarter of this year. So that's calendar quarter. So it should be online in the September quarter. It's fully funded. The market cap, I think, it's about $600 million Australian now. So relatively low market cap for the scale of production profile we're talking about. They do have quite a big debt load that they've taken on to finance this project. But that's because this project is a world-class scale project. Huge production profile for 15 years. There's nothing like this really on the ASX. Australian companies don't tend to have projects with this sort of mine life. Anyway, new projects usually only shorter mine lives. This is a big project, hence the need for a major debt load. But looks like there hasn't been any major construction issues. From what I can tell, they're on budget. They already have locked in some savings in capital expenditure, and they're going to lock in more, I think, with their hedging on foreign currency on the Turkish lira. I think they're going to come in under budget as well. So that's all encouraging signs, and that's generally the sort of stuff I see out of this company is they deliver on time. It's understated, but it's on time, it's on budget, and that's the sort of stuff you want from a production, from a company sort of coming into a large-scale production. They've got that history of operating the oxide portion of the plant in Turkey. That's something that's very important, I think. I've got another slide here. This is the production profile that they have. So you can see here, this is prior to the oxide discoveries, which I'll talk about in a minute, but they're looking at in 2019 having 350,000 ounces from the sulfide and oxide, and they own 80% of that. So up towards 300,000 ounces production for Elisa's share in 2019, and there's no one like that's a huge uplift in production from last year. They had sort of 140,000, I think, in that ballpark. This is a couple of years old, this slide, but I think they did hit around 140,000 ounces last year. But we're going to see a massive increase in 2019. Even this year, I think they're still on target for about this. I think they've targeted 50 to 100,000 ounces from the sulfide this year. So that's probably on the upper end of what they'd expect from the sulfide. But I think they're more likely to deliver toward the upper end, given that they haven't had any hitches so far in construction, and they seem to deliver on time and on budget. So I'd expect them to be toward the upper end of their forecasts. They're usually fairly conservative as well. But this is just a huge increase in production profile, and importantly, that's extremely low cost. I think in the first few years, you're probably looking at production costs. I know the overall project is $650 an ounce, all in costs, but I think in that first couple of years, you're probably looking at closer to 600, even below that. And they've got a lot of stockpiled ore. They've got 1 million ounces sitting there ready to go for the sulfide project. So it's de-risked from a mining perspective, at least. I mean, they could not mine for a couple of years and still have all the ore there ready to go. So they've de-risked the project. And the other thing, so we can see here that the oxide really tails off into the sort of early 2020s. As I said, this is a couple of years old, and in that time, they've really ramped up the exploration efforts nearby to Çöpler, and this Çakmaktepe area is a key sort of. They're finding a few satellite deposits. So they defined the Çakmaktepe Central, which I think they're looking to target about 50,000 ounces predominantly in 2019. And then it's got another, with a few more permits after that, I think they'll get another 100,000 ounces of that out of that. So it probably boosts these oxide portion of production up towards sort of 50 to 80,000 ounces each year, I think, until 2022. And then you've got this what they've called Ardich, which is formerly Çakmaktepe North, which had some really good drill results in this announcement late February. You can see here they had 67 meters at 4 grams a ton near surface, and that's a really good intercept. It looks like, and they had a couple of other decent intercepts. I mean, this doesn't have to be high grade to be economic. They produce it less than a gram per ton from the oxide at Chepler already. So I think, seeing some of these, 90 meters at 1.8 grams a ton, another great intercept there. Really good consistent intercepts, 36 at 1.3, 37 at 1.7. It's 22 at 3 there, so it's 54 at 1.5. So this looks like it could easily have a couple of 100,000 ounces, and I think that'll really push up if they can get to, say, 80 to 100,000 out till 2023. You're looking at 350,000 ounces each year for 5 years on a 100% basis, of which they'd get almost 300,000 ounces, and that's really not in the share price. So I think, given their history of delivery, I think they'll be able to hit those numbers once they define these resources a bit better. So that's really what I'm looking for in the medium longer term. Once they start production, I did a video earlier about Dacian Gold, and you've seen that's how that was really struggling in about 6 to 9 months ago. Before it was, the share price had halved from its highs, and now it's come back up and is getting closer back towards its all-time highs. So stock's almost doubled in the space of about 9 months. And I think that's really, as the market starts to see the production coming from these large-scale projects, people start jumping on board. And I expect that's what will happen with Alasa. So we've got sort of 5 to 6 months probably before production from the sulfides. So the stock's really struggled in the last 9 months. It's been just sideways trading in this very tight range around 230. Just to give you an idea, longer term, this was a big stock back in the day, and they sold a lot of their Australian operations, and since they focused on Turkey, just been going sideways between 2 and 350 sort of area. And I've just been accumulating in this range back down here for the last 9 months. So I'm averaged in about 215 now, I think. So I'm pretty happy with that. And I think that in terms of risk reward, this is one of the few companies that has that sort of, I think, 50 to 100% upside in a 12-month time frame. And there's not many other medium to larger ASX gold stocks in that sort of frame. Obviously, there are risks that the project has some issues, but given that their history of hitting their targets, I think that's, and the quality of this project is a bit higher than your average, ASX small gold producer looking to build a 100,000 ounce plant. If you can see that they've done all the work necessary, and that comes with having to get such a large debt facility as well. You have to satisfy the financiers a bit more than if you're just building a small plant for 150 million Australian, for example. This is a large scale plant, and I think the due diligence work they've done will probably show when they come into production. And then I'd be looking. So obviously this 235 area has been a bit of a supply zone for the last 9 months. It looked like it might break through there in mid-January, but push back down again. Some reasonably large volume. I think there was in the rebalance of the GDXJ ETF on Friday night, and this is the ASX listing, but I think there's some sort of arbitrage trading there, because I know the GDXJ holds the Canadian listing, and that had about 2.5 million shares. So I think it was down weighed at about 10% of the holding in Alasa. So that's just what happens with the GDXJ. You can't really avoid that, but I think a few traders might be front running that sort of stuff. I mean, it's 2 million shares, but that's a relatively large amount for Alasa. It's sort of maybe 5 or 6 days volume even on the TSX. So it's come down to these levels, and I bought a few more end of last week in that about 209, I think. So I'm happy holding it here. And given the transformational profile, it's a kind of a buy right sit type story for me. And they're adding oxide ounces, seems to be good exploration potential. The other thing I like about this, and it's something that hasn't been mentioned, the company's even sort of stopped mentioning about it. This Jedek Tepe project is another deposit they have, which they're doing a definitive feasibility study, which is due by sort of June-ish, I guess. They've said mid-year 2018, and that's it's actually quite a large project. They haven't included the production profile in here, because I guess they're waiting until there's a bit more certainty around it. But it's sort of about 150,000 ounces average production profile. They only own 50% of the project, but it's got a lot of zinc and a lot of copper, and they're counted. They're doing it on a gold equivalent per ounce basis, but I think with the increased prices of those commodities, that particularly zinc, is about 40 or 50% higher than when they did the original feasibility study a couple of years ago. That will make a real difference to the economics. So this is a decent sized project in that 150-200,000 ounce realm, and it's not hugely costly to finance. So I think it will be a goer. Obviously, they need to get the Chepler deposit starting and the sulfides starting and ticking along before they'd consider investing in Gediktepe as well. But it just shows the quality of their portfolio is a lot higher than some of the ASX stocks. I mean, even the larger cap producers on the ASX don't have a big pipeline of projects ready to go. Stocks like Evolution and St. Barbara and Northern Star, they've got good mines, but they haven't got a project of 150-200,000 ounces just sitting there ready to go in DFS. They've got nothing of that sort, and that's why I think the quality of the Alasa portfolio is a bit higher than your normal sort of small gold producer. And I think at some point the market will work that out as well. So I think it's got a lot of upside in the next 12 months, and I'm just sitting tight here and holding for the medium longer term.